Similar business approach, and that is to acquire large brownfields land package, bottom of the metal cycle, and then use modern exploration techniques to advance that. And we've done so in all three companies, and Granite Creek was actually the first in the group to have resources. We, of course, acquired those resources with the acquisition of our neighbor Copper North at the time, closed that in November of last year. And now advancing those resources and increasing them and updating our economic assessment to try and bring the entirety of the resources into view. So the Carmacks deposit itself currently is just under 24 million tons measured and indicated, grading at a 0.85% copper. When you add the precious metal credits to that, it's about a 1.2 to 1.3 copper equivalent, depending on the metal prices, giving us just under 500 million pounds contained copper, about 2/3 oxide and 1/3 sulfide. However, the company has stated, and it is our belief, that the real prize here is the sulfide resources that we can potentially bring into an updated mine plan. And that is what we're working on right now. We have a drill turning right now. We're completing our fall drilling program of over 10,000 meters in conjunction with our spring program. And the goal of this program is to update those resources, to expand and increase the existing resources, and again targeting the sulfide to try to bring those into view. We're within 12 kilometers of grid power, and we're within 40 driving kilometers of paved highway. So the project is on the resource road in the Yukon that goes ultimately to Casino. Of course, Rio Tinto announced a major investment in the Casino project through Western Copper. And we expect that road upgrade will, once it starts to get built, will directly affect our project. And of course, there's still federal and territorial monies committed to upgrading that road as well. Currently, it is an all-season road maintained by the Yukon government. It could do with some upgrades, and we look forward to seeing that. But it gives us road access right into the middle of our project. It is a road access project. It is not a helicopter project. And of course, once you get to the paved highway, your short drive to the village of Carmacks, and then the capital Whitehorse, and then ultimately to Skagway, where there's a deep water port, where currently concentrate is being shipped from the Minto mine. So very good from an infrastructure standpoint. And of course, the Yukon continues to be an excellent jurisdiction for investment, for mining, including, like I mentioned, major investments by the likes of Rio Tinto and other majors. So back to the Carmacks deposit itself. So that just under 24 million tons is contained within the hatched purple bubble near the southern extent of the claim boundary. But in putting Granite Creek in with Copper North in November of 2020, we were able to consolidate 177 square kilometers of highly prospective ground in the southern end of the Minto Copper Belt. So we've added all the zones, zone A, B, C, and etc. The prospectivity there to the Carmacks deposit, and we expect to be able to grow those resources. Now, at the deposit itself, there's been over 50,000 meters of historic drilling. That's defined the resources, the current resources, as well as many satellite targets, zones that have potential to add tons. So I want to talk about the zone potential and potential that we're seeing with this year's drilling. We went in really we had two goals. We wanted to update some of the sulfide from inferred to indicated and measured, and we also want to be able to grow that sulfide. All the drilling this year, especially the diamond drilling, has been primarily focused on growing the sulfide portion of the resource. We felt that the sulfide portion had been underexplored, and we saw that to be the greatest potential. In zones 1, 4, and 7, which were the only zones that had a mine plan created for them in the 2017 preliminary economic assessment, We saw again that the sulfide, which underlies the oxide, to be a significant target for us. That those 4 zones under the 2017 PEA provided roughly 7 years of oxide ore to the mine plan. But we see these 3 zones, 1, 4, and 7, to have a mine life of 10 to 12 years at that same throughput. So at a 5,000 ton per day mill, when we bring the sulfide into view, we think those zones would give us a 10 to 12 year mine life. And we had great success at Zone 2000 South, which is just only a few hundred meters from 1, 4, and 7. We were able to extend the mineralization at depth between 30 and 130 meters deeper than what had been previously known. And we expect to be able to have a 2 to 3 year mine life on our current resource plus the current drilling, and that is still open at depth. And there may be a way to actually connect that Zone 2000 South to 1, 4, and 7. There's quite a bit of ground between them. There's a path that we've identified with geophysics that we can see that they may connect, and if that did so, that would be a game changer for mine life. And then Zone 13, we drilled that actually last year, and we hit 126 meters of 0.6 copper. So the grade there is a little lower than Zone 1, but it's primarily sulfide. And we can see with existing drilling and of course the drilling that we've done this year, an initial 3 to 4 years of mine life. So when you add all those together, we're well over a 15-year mine life. And keep in mind that the 2017 PEA only contemplated 7 years of oxide mine. So our goal with an updated PEA that we're working on right now, likely be delivered to the market first quarter of next year, would be double the mine life of the 2017 PEA. And we think that would be a major revaluation for the company should we be able to achieve that. And all the pieces seem to be coming together. Now, in addition to the targets that we drilled this year, there's also multiple satellite targets, zones 5, 6, 8, 12, and 14. And we did some RC drilling, so reverse circulation drilling on these targets, and we think there's even greater potential here for further mine life expansion. Some of the reasons that these zones are available to explore and haven't been drilled off by previous operators is that one of the mine plans from 2006 had some of this area under infrastructure. So the heap leach pad covered Zone 5 and part of Zone 6, and actually part of Zone 8 as well. So these zones haven't been fully explored. The current mine plan that we're developing and building off the 2017 doesn't use a heap leach pad, so it opens up a lot of real estate for exploration. And the geology, what we're seeing is that these parallel to sub-parallel zones have great potential. And we think once you have the main mine developed, you don't need to be able to add a lot of tonnage to increase mine life. So those zones have come into view and are highly prospective for us. So just the drilling on Zone 1. What we did was we went in and we looked at the orientation of the drilling done by previous operators. And what had happened was there were several drill holes that they had drilled right down the throat of the deposit. And the rationale for this, when they did them, was to understand the geometry of the deposit, how deep it went, where the transition zone between sulfide and oxide was. So they weren't really typical resource drilling holes, but they did give a lot of information. So when the resource was estimated in 2017, these holes were used. And the problem with this is that they actually drifted into a lower grade portion of the section. So we felt by going back, drilling true across the section, that we would be able to actually increase the grade in the measured and indicated sulfide and the inferred sulfide. So that's held up quite well. If you look at drill hole 4, the copper is all higher than the measured and indicated in the resource estimate. So our hope is that when we redo this model, that the grade is actually going to increase in the sulfide to be able to bring that into an updated mine plan. But our real interesting zone this year, of course, was 2000 South. Our initial news release talked about several holes that were beneath the resource, again, with all the grades that we reported above the grade of the current resource. So when we grow that resource, our hope is that not only we're going to grow in tons, but we're also going to grow in grade. And then we intersected hole 2111, where we hit 105 meters of 0.96% copper, a 1.18% copper equivalent. This hole was started below, the intercept started below the current resources and extended over 100 meters below the current resource. So we think we've expanded the resource at this part of the zone over 130 meters below. So that's going to add significant tonnage to the resource when we go back and get that remodeled. We're working on that currently. And we also hit a very narrow intercept, 0.5 meters of massive sulfide mineralization, grading 18% copper. Now, the significance of this, even though it's very narrow, this is the first time this style of mineralization has been identified on the property. So this brings, not only do we have disseminated mineral within the mineralized zones, we have net textured sulfide, we've got sort of vein-like sulfide chalcopyrite, but we also have massive sulfide, which can really bring your grade up if we can find any more of this. So this is why when we launched our phase 3 program, we're now focused primarily on zone 2000 South, and we're stepping out to the north on the screen to the right of 2011 and behind 2111, in order to continue to grow those resources ahead of bringing them into an updated resource estimate and ultimately an updated mine plan. We did some work on the northern part of the property zone around Zone A this year. When we drilled that last year, we did hit some spectacular mineralization, 4.3% copper over 4 meters. What we felt we needed to do before going back here in a big way is do some geophysics, some more geochem, some more getting a better understanding of the orientation of the mineralization here. So we did that. We hired a geophysics crew to come and do deep penetrating IP surveys here and have developed multiple new targets based on that. We did put an RC rig on some of these targets this year, and we did some trenching. So those results will be coming out. Now, the reason we did such a deep and penetrating IP survey is that previous operators back even into the 80s had done geophysics in the area. They'd done induced polarity IP surveys. But the problem is that the quality of the surveys that were available during that time period, late 70s, early 80s, were very shallow penetrating. So they probably only saw between 100, maybe 150 meters below surface. And we know at other areas at the Carmacks deposit and some of the Carmacks North area is that any mineralization that you're likely to find in that area, sort of the 100 to 150 meter range, is probably going to be oxidized. The problem with that is that a lot of geophysics, well, most geophysics don't see the oxidized mineralization. So what we needed to do is we needed to see deeper to see if we could detect a sulfide mineralization, and then use that as a proxy to determine where there might be oxide mineralization. So in multiple cases, we've been able to identify chargeability that we think is probably sulfides. And in some cases, we think there may be an oxidized cap over that. So we did limit, like I said, we did limited RC drilling on this zone this year, and we think we've got multiple targets for follow-up drilling for next field season. All the RC is completed now. We've just got a couple more weeks of diamond drilling at the Carmacks deposit, and then this year's program will be done. We did bring in Sedgman and Mining Plus, an engineering firm that works on process and an engineering firm that works on mine design. And one of the major things that we wanted them to do was to bring the sulfide into a mine plan and actually bring all the resources, both the oxide and the sulfide, into an updated mine plan. Like I said earlier on in the presentation, I think with the work that they're doing and the work that our very dedicated exploration team has done this year, I think we see the view to a 15+ mine life based on a 5,000 ton per day operation. Now, I should caution the listeners, this is a very forward-looking statement. We have a lot of work to do before we can get there. But building off what previous operators had done, both the oxide and sulfide resources that were known, developing an updated mine plan for those, I think we'll be able to deliver something in that range to the market. So I invite you to keep an eye on the company, add us to your watch list, and look to an updated resource estimate and preliminary economic assessment to be delivered early next year. Just a couple brief words about geology. I don't know if there's any geologists in the audience, but this is a really unique setting for this deposit. The entire thing is contained within what's known as the Minto Copper Belt, and this is a series of high-grade pods of mineralization, high-grade tabular bodies of mineralization that sort of start south of the Carmacks deposit itself, actually, and continue on through our Carmacks North target all the way up to Minto Mine and beyond. These tabular bodies are contained within a intrusive body, the Granite Mountain batholith, but the Granite Mountain batholith is younger than the tabular bodies of mineralization, so that they've sort of engulfed them, and the contact is really sharp between the granodiorites and the mineralization. So again, all the mineralization is contained within metamorphic rock, foliated to gneissic material, very similar to the Minto deposit. And the opportunity here is when you find one of these tabular bodies, we now know that they repeat themselves. They repeat themselves at depth, and they repeat themselves along strike. So once you've tied into one of them, and we've tied into many, there's likely to be another one nearby. So that's part of our exploration, as we look for ways to find additional bodies and just to incrementally add potential material to, like I said, to an updated mine plan. Minto Mine, currently in operation, they're a 4,000 ton per day mill. Their reserve grade at 1.7% copper is quite high for the industry. Our equivalent grade, like I mentioned early on in the presentation, is about 1.2 to 1.3%. So we're a little bit lower, but our material is very similar to theirs in composition, and concentrates that are produced at Minto are quite high grade, some of it over 40% copper. And the reason for that is there's a lot of bornite present, as well as chalcopyrite, and it produces quite a clean concentrate that is in high demand and actually demands a premium. So a very good jurisdiction to be working in. So just where we've come from, Granite Creek, again, is a fairly young company. We were launched in January of 2019. But within a very short period, we've gone from a earlier stage copper play to a resource company. And as you've seen in this presentation, we're working very, very hard to grow those resources and to bring those expanded resources into a comprehensive mine plan targeting 15+ years. As you can see, the pictures on the bottom of the screen there, that is our semi-massive chalcopyrite and some of the high-grade mineralization. The one on the left is grading just under 19% copper, and the one on the right is just over 4% copper. So very nice material to be working with, and very excited when the geologists see it. So just completing the presentation today, we currently have 121 million shares outstanding. 172 fully diluted. We have a lot of options in the money, and we have actually a few warrants in the money as well. Currently sitting on about 2 million cash as we complete our fall drill program, and hopefully be able to continue to deliver information to the market, and very good news release news flow coming through the fall and into the winter months. And yeah, invite you to follow the story. So that is all for the presentation. I think, Chris, you were manning the questions, and
yeah, and we actually do have a few. I'm back, if you can hear me.
yeah, I can hear you just fine.
Okay, so I'll go in just random order here. The first one that came up is in reference to Minto Mine, asking what the relationship is with that group, if any, and if you know of any update on a go public transaction, one that they guys announced in June, if I remember.
Yeah, you know, we hear all sorts of rumors on the street about when they're going to complete that go public transaction, but nothing definite. I know a couple of the broker firms that had that are working on that. I believe the raise is around $45 million. So we expect, you know, sometime, if I hazard to guess, I would expect it by the end of the year. As far as relationship with those guys, we keep in touch with what we're doing. We don't have any formal relationship with them. There is some synergies possible with their operation. I mean, they're fully permitted. You know, they're a producer. They have capacity to expand their mill, and if they did, of course, they would be looking down the belt potentially for resources. I know in the announcement that they made on their go public transaction, they alluded to further consolidation in the belt, and you know, we would be a prime candidate for that. So there definitely may be some synergies in the future, but there's nothing formal at this stage.
Okay, that actually dovetails nicely into another question. What's the ultimate strategy, referring to Granite Creek to us?
Yeah, so you know, we see three possible exit strategies. One would be we find something modest, which I think we're already past modest as far as contained metal in a resource. But there may be a toll milling scenario or a scenario where we're basically handing resources across the fence to Minto. If we find something larger, and I think that's kind of where we are now, we become an attractive takeover target for Minto. As they want to lock down those resources and prevent, you know, another party from coming in and acquiring them. But our real goal, and you know, sort of mid to long term goal, and you know, I think we can probably achieve this in the coming years, and that is to attract a large larger copper player to the belt. You know, we think that an operating mine to the north and rapidly growing resources to the south, we're only 40 kilometers away from that operating mine, might be attractive to a mid-sized to large copper producer once they recognize the potential. We know from talking to some majors that £1 billion is sort of the baseline before they even consider entering into a district. Of course, they need to see blue sky above that. You know, our current resource based on the 2017 PEA is just under £500 million contained copper, and that's straight copper. That's not a copper equivalent. So we think, you know, in fairly short order, we should be able to get to that sort of a minimum metric to be able to attract a significant player to the belt. And if you look at the current resources at Minto and you combine them with us, it's a pretty interesting story and I'm sure there's some eyes on that story, seeing how it develops.
I guess that's speaking of larger copper players or larger miners anyway, with Rio Tinto taking a piece of our neighbors to the west at Casino.
You know, that's a good point.
Introduces a new group to the Yukon as well.
It does. I think, you know, you need to keep in mind the scale is significantly different. I mean, we're you know, we're high grade. I mean, I think they're running about a 0.2 copper at Casino. We're well over 1%. Smaller footprint. We think it, you know, probably easier to permit, probably a shorter timeline to production than some of like a large Casino type mine, but you know, still pretty significant output. The 2017 PA contemplated 30 million pounds of copper produced on an annual basis at 2017 prices. They were about $1.25, I think, cost to produce. So when you look at numbers like that, and you can increase that mine life into 15, maybe even 20 years on if things really go well for us, that's pretty compelling for a mid-tier to even a larger producer to be able to add that production profile to your books for a relatively modest cost compared to the multi-billions it's going to take to build some of these bigger mines.
Well, it'll be interesting to see what the market valuation post go public is for Minto, and then if you look at that belt as a acquisition target as a whole.
Yep.
What are the next drill holes to be announced, or how many are left, I guess? Well, let's just change that. How many are at the lab and how many are pending? And then how many holes does it look like for phase 3 that we're in right now?
Okay, so from phase 1 drill program, there's 10 holes left to be released. The labs have slowed down considerably from where they were this summer. We hope to be able to put those out in the coming weeks. There's an additional 20 RC drill holes. Now, keep in mind that the RC program was focused on some earlier stage targets, but we still expect to be able to have some really interesting stuff to be able to put out on that. And then we're looking at 5 to 6 holes for the phase 3 program that is just wrapping up in the coming weeks. So still, yes, just still some considerable news to put out, and of course working on an updated resource estimate as well, which the timing of that is a little dependent on getting all the assays in. But our hope is that the labs will start to open up a little bit again as we get through the fall season, as some other programs wrap up.
Okay, that actually just answered the final question, which was just timing of that resource and how that's on track. But obviously dependent on the labs and that material, but plenty of news flow. I was going to say cash flow, news flow
Yes.
coming. Getting ahead of myself. So I don't see that there are any additional questions, so we could call it there and get back to the markets.
Yes, again, thanks everybody for attending today. I really appreciate it, and yeah, good luck out in the markets today.
Okay, thanks everyone. Thanks Tim, and we'll chat soon.